Hello to all the Web3 enthusiasts out there. This is Max speaking, and welcome to the new exciting episode of Synopsis. Today we have a new guest, a new expert. Please welcome Lasse Clausen, the founding partner at 1KX. Hi, Lasse, how are you today?
I'm very well. Thank you for having me.
Yeah, always a pleasure to see new experts here. Well, if you don't mind, we have a bunch of questions prepared. Let's get straight to the action.
Sounds good.
Of course, to begin with, since it's your first time here at Synopsis, let's start with some introduction. Could you please share your background as a tech founder and how you found your way into crypto?
Yeah, so my name is Lasse Clausen. I'm one of two founding partners at 1KX. And Chris, who's the other partner, and we were tech entrepreneurs in Berlin in the early days of the Berlin startup scene. This is, when SoundCloud was working out of a coffee shop. And, normal people on the weekends, they go to brunches and parties. And I wanted to know what it's like to pay with a mobile phone. At that time, there was no PayPal app. There was no way to pay with a mobile phone other than with Bitcoin. And we happened to have the first place in the world that you could actually pay with Bitcoin. It was this very grungy burger bar in Berlin, started by this libertarian Texan. And so I, tried it out as just as a means of payment, right? This was the Bitcoin story then. And to be honest, I didn't think it was going to win as a payment system. I was a mobile internet entrepreneur, and so we were optimizing conversion funnels every day. And we could really see that in the sign-up process, if you have just one more step, you lose 20% of people because they don't want to bother, giving their email address or some other sign-up step. And so then I looked at how difficult it was to get, a Bitcoin wallet on my phone with money in it. I had to back up the seed phrase, and if I lose that, then all my money's gone. And so I didn't think much of Bitcoin, to be honest. But I did also have the fortune to meet some folks involved with Ethereum at a dinner also in Berlin. And I thought, my Bitcoin isn't, it's kind of useless. And I think Ethereum as the new internet of money is kind of interesting. And so whatever Bitcoin I left on my phone, I put it in the Ethereum ICO and kind of watched this space on the sidelines. And then you fast forward to 2016, and then Chris and I, we actually looked at blockchain broadly as a platform to build companies on top of, to build apps on top of. And then we realized pretty quickly, okay, this is way too early for, let's say, an Uber on the blockchain just yet, right? At that time, you really only had Bitcoin, Bitcoin forks, Ethereum, and ERC20 tokens that you could sell in an ICO and then send to Binance. But anything else, nothing existed. But I think we were, really, really excited. And within a week, it was kind of obvious that this was going to be massive uh, for a couple of reasons. One of them was just that amount of talent and the vision in the industry was really remarkable, right? It was all mostly white paper stage, but I think everything that's happening was kind of possible to envision at that stage. And particularly if you're a technologist and you understand software and you understand how bad most software is, particularly financial software, um, the advantage of using blockchains was just very, very obvious. And so it was clear to us that we were going to be in the space. We just realized like, okay, it's a little bit too early for an application entrepreneur to come in. But we did see that the investor landscape at that time was very, very immature. There's basically three funds, and most importantly, none of them were started by former founders. And that's something that we've also seen in venture capital, that for early stage software, former entrepreneurs do tend to be the better investors. And we've had that experience firsthand. So when we were entrepreneurs, we had a number of very, very smart investors that were very thoughtful and asked us all these thoughtful questions, which were completely besides the point. But we were lucky enough to have one entrepreneur who had IPO'd a company as an investor, and he was really the inspiration of what kind of investor we wanted to be like. He was a former entrepreneur. He really understood the problems that actually mattered. And so we set out to build, an investment firm, global, with a very authentic approach of just supporting entrepreneurs. in their, to be honest, very difficult journeys. Being a founder is not glamorous. It's very, very difficult. And we just wanted to be, the firm that really supports entrepreneurs.
Wow. Thank you so much for sharing, and sounds like a great story. And I might assume that for our youngest viewers, this might sound like a tale from a very distant times. However, the technologies are accelerating, and the Web3 space is maturing so fast that, to be honest, it was, I would say, that not so long ago. Well, and yeah, thank you once again for sharing. And let's make also an introduction and a brief overview of 1KX. So please tell us about your investment philosophy and how are the findings of the Onchain revenue report shaping how 1KX will evolve its portfolio?
Yeah, so 1KX is a global investment firm. We're 22 people. I think we're one of the few firms that manages to, be crypto native, but also be institutional grade. So our investors range from sovereign wealth funds to pension funds. So, very, very institutional, traditional, risk-averse investors. But then, we also have Chris Dixon and Mark Andreessen as LPs. So a nice collection of very, very smart investors that range from, from VCs themselves to pension funds and endowments. Um, and we are basically technology and fundamentals driven. Now, that's actually something that seems obvious, but I think also a lot of firms in this space are, sort of very good at picking themes or trying to invest in themes and momentum plays. We are really, we have a at least 3 to 7 year horizon in our investments, and are really betting on the fundamental technology advantage that blockchain offers, and invest as a venture capital firm. So we invest very, very early. We try to be as helpful as possible, which sometimes also is just sitting on the sidelines for 6 months and letting them do their thing, right? This is notorious for early stage investors that tend to overhelp, or which can be not very helpful at all. So again, coming back, just a very genuine attempt at helping entrepreneurs in the blockchain space navigate this difficult environment, because we also think that running a startup in blockchain is probably twice as hard as in the real world, because you have building software is very difficult. It's very complex, right? Now you're also building high security software, and if you make a mistake, you lose hundreds of millions of dollars, and this literally happens. Plus, you are basically a publicly traded company at your Series A stage, sometimes even earlier. And you have to deal with, retail investors who are sometimes very, very impatient. And your token price is trading 24/7. And so overall, we think that, being an entrepreneur in Web3 is exponentially harder. And we've, like you said, right, for the younger viewers, we're basically, we've been in the space forever, and we've seen a lot of it, and we think we can be quite helpful in navigating all these challenges, right? So anything from product market fit, software development, to security practices, to how to navigate the capital markets. Uh,
Well, thanks for sharing. And since we know that you discovered the potential of Ethereum during the ICO era, so you are the very right person who can find early stage projects and see and discover their potential. So no doubt here with this. And for our viewers who are familiar with what you are doing in 1KX, it's not surprise that today we're going to speak a lot about the Onchain revenue report. So the next question is, why is on-chain revenue the most important or one of the most important metrics in valuing projects? And how does understanding on-chain revenue compare to simply following the token price or of a specific project or an asset?
Yeah, so this is, I think, an important debate. because we talk to a lot of very, very smart people who are very generally are trying to understand what the deal is with blockchains. Like why is this a $4 trillion market cap? And what is the utility? What is the use case and the value? And now also blockchains are a very unique industry that people tend to have very, very strong opinions about it, either positive or for the negative. And what we've encountered that people were skeptical, usually if they ask what's the use case here, and you say, well, we have over $6 trillion in on-chain trading volume. Well, that's just people trading with themselves. This is not real. And then you mentioned another, stable coins like, well, we've got ACH, we don't need stable coins. And so we just noticed that the goalpost kind of shifts. And we think that basically fees paid by users or by companies really anchors the conversation around utility and product market fit. Because if you are, so pure on-chain fees of protocol businesses are running to be almost $20 billion this year. And that is a number that, I think it ends that conversation, whether you like the use case or not. This clearly is product market fit and utility. If, again, companies or users are willing to repeatedly pay high amounts of money for an on-chain service. Um, and so we think that with that in mind, the majority of people misunderstand digital tokens as a speculative asset class for retail investors. And I think they're not entirely wrong. That's definitely a big part of it. But it turns out that if you exclude Bitcoin, over 75% of the market cap of crypto is now fee generating. And so we actually have a vast majority of tokens that are related to, protocol businesses that have utility and that people and companies are paying for. And we think that is something that is underappreciated, particularly by outsiders. Because again, it's all speculative, it's sort of trading on vibes. And a big part is, right? And so, if you go into more detail, there's some, massive disconnects in sort of fee to market cap ratios, fee to price ratios. But we thought that the big development is that now is a good time to actually talk about these fundamentals. There's definitely some crypto native voices that are sort of one quote was like, once we start talking about fundamentals is over. And I think that was very right in the early days when you're really building out that low level infrastructure and you don't really have use cases yet, right? You're just trying to make Ethereum, Solana, and other blockchains kind of scale. You're coming up with L2s, and that took years, and that was even uncertain whether that would ever happen. And I think for that period, you needed you didn't need to focus yet on the fundamentals of the use cases yet because there weren't none because the infrastructure wasn't there. However, you've been in the space for a long time and you've witnessed how great and usable blockchain applications are nowadays, right? I don't know if you remember Augur version one. That was the very first blockchain application, and you had to basically wait for full node to sync on your computer, and even after that, it was completely unusable. To now, you download an app, you have Face ID, right? You have the key stored in the secure enclave on your iPhone, and it's just an amazing user experience now. And so again, coming back, we think that now is actually a good time to start talking about fundamentals because they actually are there.
Get it. Thanks for the great examples, and everything seems to be completely clear. And in addition, the question that might be interesting for project founders and probably core investors, what can be done to increase on-chain revenue?
Um, I think it's a very simple, product market fit. And we again, we come from a time where you launch a token and then you try to figure it out. Whereas we pretty early on, guided entrepreneurs, or our recommendation was to actually find product market fit and then launch a token afterwards, to make sure that also the token really does fit into the protocol business and then not sort of something that you slap on top so you can justify a token. But it's really all about product market fit. Um, and then the second step is, yeah, being able to charge for it, and do take some fees for it. And we're seeing that actually that the number of protocols that are generating fees is at all-time highs. That is also largely because, or in big part, because of the regulatory change, right? We were under an administration in the US where legally the safest thing to do as an entrepreneur was to launch the most useless meme coin, right? That was really the safest thing to do. The second you actually launch a token with maybe value accrual, fee accrual of a useful protocol business, the SEC came after you. Now, fortunately, that has changed. It's a 180. And so entrepreneurs really do feel that there's an opportunity to now launch fee generating tokens. And also the value flowing back to token holders is actually also at all-time highs. And if you look at, relatively speaking, the percentage is actually higher than what Apple distributes to shareholders in terms of profits. Uh, the fee generating tokens that are redirecting in some direct or indirect form revenue to the token holders is 37%, right? And so this is a very, very high percentage. And again, this is why we think it is actually a good time to look at digital tokens as an asset class um, that is based on fundamentals, but that also has value attribution back to the holders and the investors, right? So you're not buying a meme coin and hoping that it becomes, some other people buy it, but you can look at fundamentals of an on-chain protocol business, look at the fees, and you will actually be rewarded for it as a passive, holder of the token. And that's, we think is a big, big shift that is, I think, going a little unnoticed. And again, this is why we launched the on-chain revenue report. We'll be, updating it every 6 months. But we think this is, a great time to actually look at fundamentals for protocol businesses. Yeah.
Wow. Extremely detailed, but at the same, everything is now in order. Thanks for that. And at the same time, I would like to address to our audience and to remind that if you guys still have any questions left after these detailed answers from Lasse, so don't hesitate to drop it in the comment section, and we'll see that probably we'll have more episodes with Lasse and discuss it in the future. And we're continuing. The next question is why do tokenization, DePIN, wallets, and consumer apps stand out as high growth areas?
Yeah, so for that question to answer, a little bit of context. So in 2021, we had all-time highs of fees generated, still a little bit higher than this year, but over 40% was Ethereum alone. And so basically, people overpaid for proof of work blockchains just for transactions. And this was still the time when we didn't know if blockchains were going to scale. We were at 15 transactions per second, Bitcoin at 8. And essentially, there was a speculative period where people said, I don't care if I'm paying $250 in Ethereum transaction to mint an NFT. I think, I'm going to 100x this NFT and then I'll pay back for it. And in the meantime, the blockchains have actually scaled, right? So the average transaction fees for a blockchain transaction went from 63 cents down to 9 cents now, right? So it's almost 90% drop. Um, and what has that enabled? That basically that the underlying infrastructure is almost commoditized, it's extremely cheap, it's extremely scalable, and that now allows other use cases to be built on top and use that cheap and fast block space to offer products and services. And so right before, the only use case that really supported a $250 Ethereum transaction at peak times was a heavy financial use case where, we're talking about, I'm going to make at least $10,000, $20,000 on this, right? Anything else of lighter value expectation or expected value was just not feasible. And now we have this massive pullback in blockchain transaction, not just fees, but then also volume, right? So the volume is up almost 3x since 2021. Um, and that has really, set the groundwork for real use cases to actually be feasible. And this is why these sectors, which are, more real world use cases, entrepreneurs are coming in and seeing that, hey, I have actually great cheap blockchain infrastructure. The usability is good, right? My users don't need to, back up seed phrases and be warned that they're going to lose all the money anymore. And this is the reason why these more nascent industries obviously are growing faster, but it's also because now they can.
Wow, awesome. And well, the next question would be pretty short, but hopefully will be pretty insightful for many viewers. And it is what are the larger implications of your findings?
Yeah, I think there's some, hopefully, we can anchor the conversation around, particularly for, there's so much new interest in this industry now. Basically, the sentiment of crypto natives is almost at all-time lows versus the sentiment about blockchain of outsiders is almost at all-time highs. Um, but again, if it's misunderstood as just meme coins, not trading on fundamentals, I think we're not able to maintain any interest from this. But we hope that with this report and hopefully the work of others on fundamentals, we can have a just more sophisticated set of investors, maybe institutional investors in some time in the future, actually participate and see this as an investable asset class. Those are like, this is what we hope are the larger implications, that the story around blockchains and particularly digital assets themselves as an investable asset class changes.
Well, thanks for sharing. And this is the kind of answers I always hope to hear when coming up with such kind of simple things. And thanks for sharing, really insightful, I would say. And before we move on to the final part of today's discussion, let's add one more kind of simple question in between. Could you tell us why should users and investors actually care about fees?
Yeah, I think it's coming back to, am I buying a token that is, if you're an investor and you're just looking at price stability, is there actually an underlying mechanism where there are flows, there's value that people are, and companies are paying for usage, and it's part of that basically going into supporting the token price, right? And that is, we have that with equities as well, that really share buybacks, equities outperform massively. There's indices that really allocate only to equities with share buybacks. And a similar thing, we think this will happen here, that I don't have to worry that, if I invest in an asset, I don't have to pray that this becomes the hot, theme of the quarter and that everyone's piling into that theme. And then, my return is there. But you really have, an underlying, value that is supporting, the asset price of your investment.
Got it. Thanks. And as we're getting closer to the final part of today's podcast, it's the time to drop some announcements and maybe teasers for 2026, which is already on the fingertips. So could you please tell us what should we put notes about, and what are the biggest things we should expect from 1KX in the upcoming year?
Yeah, so this is an ongoing series of the revenue report. It will be updated every 6 months. So we'll have basically the full 2025 coming out sometime in the early spring. From what we know so far, our base case projection for 2026 is that on-chain fees are going to grow by over 60% to over $32 billion. So if you look at, you have on-chain fees, then you have other fees such as centralized exchange, fees, mining rewards, staking rewards, etc. We really focus in this report really exclusively on fees that are paid on-chain. And that is also the fastest growing segment out of all. And that is, I think we can expect really the value and the utility that people and companies are paying for to just grow at the fastest pace out of any other segment in the industry.
Awesome. Sounds like the great news. Now we know what to keep an eye on, and we'll be looking forward for new findings and new reports. And we came up to the final traditional part of all our podcasts. And as it said, it's a pre-New Year's time. So can you please address directly to our audience with some piece of advice or call to action on New Year's wishes, whatever you find interesting, useful, insightful for people to hear right now? Please go ahead.
I think maybe it's kind of obvious, but it really helps throughout the years. If you do two things right in this industry, you can make a lot of other mistakes and you'll still be fine. Um, and the first one is long term, right? And so if you think about the people that bought Bitcoin at the top in 2017 at $19,000, they're fine now, right? But there was a period where they were not fine. So that's the first part. You got to be long term. And the second one is ideally you're also counter cyclical, right? And so obviously instead of buying Bitcoin at $19,000 in 2017, buying it at $6,000 in 2018 would have been much better. Um, so yeah, I think the advice or the outlook is focus on those two things, long term and counter-cyclical, right? And the second part is really also what Warren Buffett always says, like, is it a good investment or is it cheap, right? And so it has to be cheap as well.
Well, nothing to add, actually. Completely agree with what's been said. And these are like the fundamentals that many people, extremely many people, are missing. So one more reminder is a great ending for today's discussion. Well, for today, that's it. Thank you very much, Lasse, for joining in. I believe it was insightful for all our viewers. So, guys, be active in comments, show your thumbs up to see Lasse in more episodes. And of course, follow 1Ks, follow Lasse on all socials, not to miss the big things that are coming. And stay safe. Well, thanks for everyone. And thanks for you, Lasse, once again.
Thanks. Thanks for having me.
Well, hope to see you in more episodes and bye bye for today.
Bye bye.